Hey everyone, welcome back to the channel. So in this video we're going to be covering HEX, 3 cents, and what comes next, right? What now? So if you like this kind of quantitative and technical analysis, make sure to leave a thumbs up, be subscribed by the end of the video if you aren't already, and let's go ahead and analyze these charts. So recently we were live, and if you were there you saw, and if not you might have seen the replay, that we reached 3 pennies per HEX live on stream. And let me give you proof here. This is Uniswap V2, and obviously V3 is already out, so we'll probably see some way to chart that in the future, or some sort of aggregator like we'll see, right? This will be interesting. But this is the Uniswap V2 data, and you can see that we reached 3.1 pennies at the very top of our rally, so to speak, right? And the reason I had it on a line chart is you can tell that our previous local top was around the 214 region, okay? And this was on your candle close. But notice that when we actually plot candles, that this wick we had came down identically to our prior resistance. So, good news, maybe. Although, remember, our technical target for our bull flag, this bull flag here, was 3 pennies. Does that mean this is it and we can't keep going up? Most definitely not. We've also referenced other times in the past where, we've blasted right past through our technical targets by a lot, right? By almost 2x at one point, which is a common example we like to give of the ascending triangle back in October of last year. Also, another case you could make for the fact that we could still be going up is, let's actually pull up over here on our longer term chart, right? Like if you consider what I was pointing out a while back, if you follow the Twitter, then you'll know exactly what I'm talking about. If not, go ahead and follow me on Twitter, link in the description, always there. But what am I talking about? I'm talking about this over here. Let me grab our ABC correction wave. And remember, we actually tweeted about this, and we didn't really cover it here on the channel, right? We don't talk too much about Elliott waves. The most we've ever talked about Elliott waves is actually on our live stream with Looking at Crypto. So go ahead and check that out if you haven't already. I'll leave it here. But we talked about this ABC correction wave, right? And why am I bringing this up is because after an ABC correction wave, sometimes we see impulse waves. And what do impulse waves look like? Well, they are made up of 5 waves. Typically speaking, generally speaking, when you do Elliott wave analysis, wave 3, right? So we had wave 1 right here, and then wave 2 is a little dip. Wave 3 is generally the longest of the Elliott waves, right? So again, this is complete speculation here, which I just drew, but what I'm trying to get at is wave 1 took us about 3x, and if we go traditional Elliott wave analysis, then this 3 wave here should actually be longer than this wave, which the length of this wave, I guess you could say, was about 2 pennies or so. So the length of this wave, in theory, should be longer, right? And a log scale obviously exaggerates this a lot. However, we generally see 3 waves being the longest, or at least not the shortest, and then having a 5 wave that takes us to our actual peak. So whatever this looks like, right, whatever this turns out to be, I can't guarantee it'll turn out to be anything. None of this is financial advice ever. Here's a generic disclaimer for this video. I do want to point out that we could be in a 3 wave, right? So that kind of contends with the case that 3 pennies was our target, and then we're just going to go down from there, because at the end of the day, this could be the beginning of, or we could be in the middle of our 3 wave actually. Okay, something else I wanted to point out was how big was our dip, right? How big was this dip? About a 33% dip. Have we seen 33% dips on the way to higher levels? Of course. Let's actually hunt some down right here. Look at this one. This was a 34% dip before we actually went on to form a high that was about 27% higher. So if we then we're where that dip began. So if we were to take a 27% move from the top of where we were, or at, you know, around the 3 penny region, 3.1 pennies, 27% above that is 4 pennies. So again, this train may just be getting started. We don't know where the top is. We never know where the bottom is. We can use tools, right? Like we actually called this bottom pretty nicely. We actually called this bull flag pretty nicely. So there are tools you can use. But if you were to just ask me to guess whether we've topped out or not, my guess would be no. Although obviously I have no clue what's going to happen. But the tools I'm seeing are indicating potential continuation of our move up. Again, I have no clue what's going to happen, but I'm just looking at the data in the charts. And so we've had anywhere from 18 to 40% dips. If you look at prior videos, we analyze like how big are these dips on the way to our run-ups, right? And we can have fun and do this pretty much along any time frame, really. Like this rally right here, a 24% dip, right? Let's look back here. This rally over here, we had a 30% dip, you know, during that rally. What about this part over here, right? 26% dip. So we see anywhere from, again, 18, 26, 20, 30, even 40% dips on the way to higher levels. And we've talked about this in the past, that even Bitcoin, right, the blue chip cryptocurrency, the most liquid cryptocurrency, its 2017 bull run was characterized by 30 to 40% dips. Current bull run has been characterized by, I believe, nothing more than like a 30% dip. But I will make this case time and time again that to think a coin as liquid as Bitcoin can dip 30 to 40% on its way, you know, 100x or so, like from 200 to 20k, and then to think that an illiquid cryptocurrency like HEX can't do something like that, you know, it makes you think. Okay, so right now we're currently at we're about 2.7 cents, but look at that, guys, just look at the absolute size of this wick. We should probably actually look at something. Okay, let's look at the size of this wick compared to other ones on the daily. For example, I think the biggest wick we've ever seen, I mean, it might be clear just by looking at the chart, was this big payday wick of, so this is a measurement from the bottom of this candle to the bottom of the wick, about 45%, which this wick essentially means that price dipped and came back up, right, within a matter of the time frame we're looking at. So if we're on the daily chart, it pretty much means this price action down here didn't last for, if we zoomed in, it's probably just, you know, an hour, 15 minutes, or even less. But when we zoom out on the daily, you pretty much see that, you know what, if you had not looked at the charts for a day, for example, you would have completely missed out on this wick, right? Because it happened so quickly and recovered so quickly, which again speaks to a V-shaped recovery. Let's look at the size of this wick, 22%. I don't know if we've ever seen wicks this large before, other than our big payday wick. Even this one, I guess, yeah, this one was at 23%. So, you know, not exactly a perfect science, and that was before an actual downturn. But again, we'll continue to look at. Let's look at this wick over here. This is a pretty big one. Holy. Yeah, this is a 50% wick. Let's continue looking at some of these. I don't want to look at too many of them, right? But just a few to give you an idea of what these wicks can look like. So, 50% wick, 33%, 20%. This is not that big, right? 12%. So these are generally a good sign. As you can tell over here, these wicks to the downside were indicative of reaccumulation before a rally. Over here as well, indication of capitulation before a rally. Same over here. Over here, it was a bit different, I will admit. But then again, think about this. This was coming after a 10x rally, right? And where are we now? Well, you could argue if you start measuring from around here or so, we're at around a 3 or a 4x rally. So this to me looks more like a positive thing than not. The fact that, you know, we recovered all of this all of this sell pressure, right? And pretty quickly too. If you zoom in, I'm pretty sure we recovered within just minutes. Let's zoom in, right? This is a 15-minute chart. Look at that. Wick down to the 214 region, and then within 15 minutes, we're already back up into this sort of, I guess, this sort of consolidation region on a small time frame. Okay, so what else do we want to cover in this video? We covered these wicks to the downside. We covered the fact that we could be, holding support here on prior resistance on the daily chart with this wick that wicked down to it. Very bullish in my opinion. Let's also take a look at something I calculated for you guys recently. And these are our moving average heat maps. So these are pretty well received. These are one of my personal favorites just because it gives you a nice visual representation of where we could be in the market, whether we're overheated, undervalued, and so on. So I'll review real quick what these colors mean on our heat map. If you haven't watched the heat map videos, I'll leave a card here so you can check that out. But let's just take a look, right? So these are our longer term moving averages, our 100-day, 200-day, 300-day. Now, if we look at specifically the 300-day moving average, the reason I chose this is because historically speaking, it was indicative of the bottom, right? And we only get data for this curve after 300 days of price action, right? So over here around October 8th. And the reason I chose this, again, indicative of historical bottoming regions. So the way this heat map works is it essentially takes the curvature, also known as the percent change, and I smoothed it out to be a percent change on the weekly. So the percent weekly change of this 300-day moving average is expressed here. And again, we only get data after 300 days. So here at this peak where it gets pink, as you can see, was around, I believe, November 1st. So let's actually take a look at November. Let's go ahead and get rid of these. November 1st. And you can see here on November 1st that the curvature of the 300-day moving average was steeper than at any other point in its history so far, which is why it was overheated at that point. So moving up, and then you see the curvature start moving up even more, so the percent weekly change is increased, and it starts flattening out again, a slight increase here. So you can notice that when you see these slight increases, for example, November 1st, or the slight curvature start curving upward here, December 31st, then you can start seeing, this blue region, for example. So on the 300-day moving average heat map, you can see that dark blue and pink have been indicative of local tops, right? When I got pink here, local top, dump. When I got blue over here, just a little dark blue, we had about a 50% correction or so, 40-50% correction. And now on this 300-day moving average heat map, we are coming out of this green and more so into like this teal color. So we've been here in the past. Here, before we had about a 2x. Over here, before we actually started going down. So it might take a couple more tools to get an actual idea of what's going on. Can't just look at one tool, expect it to be predictive, right? So let's look at our 200-day moving average heat map, which uses the exact same formula, except with this moving average right here. And again, curvature starts increasing, that's when you actually get these heated points. And we only start getting this heat map data after 200 days, so you can see that the first 200 days are kind of a wash. However, look at this local peak, it was purple, okay? This local peak over here was pink. And then this reaccumulation zone was very, very nicely expressed with this red-orange color. And so you could have seen this heat map and said, you know what? It might be a good time to buy because this is historically the most undervalued we were in a large window of time, right? Even if we had just looked at it on these days where we didn't have all this new data, then you could have said, you know what? In the past 200 days, this is the most undervalued we've ever been, so it might be a good time to buy. I didn't have these heat maps back then. Would have been a good idea to have back then, but we have them now. And our final one, right? Or let's take a look at where we are now. So it's coming up to the slightly darker blue. So has this been a top in the past? Well, not really. It got a little darker over here, for example. A little darker blue over here, purple over here, and pink over here. So it looks like we still have some room to move up on this chart. Now let's look at our 100-day one. So again, we use the 300, the 200, and the 100-day moving average to make these separate heat maps. The drawbacks of something like the 300-day is we have less data, though it might be more accurate in the long term, okay? And notice that we didn't have any of these peaks get as heated as this pink one because it's a longer term approach, a longer term perspective. Whereas when you look at the 200-day, it moves quicker, right? The 200-day is a shorter term moving average, so it moves quicker. And so you'll see more, I guess, volatility in the chart where, you start seeing actual potential peaks at shorter term peaks. You get what I'm saying? So the drawbacks of longer term moving averages are less data, yet the pros of it are you get a longer term perspective of, macro peaks. And the drawbacks of something like a shorter term moving average is slightly more chaotic chart. When you see a local peak, it might not be indicative of a macro peak, although the pro of these, the heat map with a 100-day moving average is that you get more data. So let's take a look at it. So I personally really like this one because it shows you that the most overextended we've been is back here. You can see the chart turn pink, right? Dark blue, pink, purple over here when we had pretty much finished our 50x move from March 13th, 2020. That took us about 2 months. Okay, so the reason I like this chart so much is because essentially this chart would only turn, the data points would only turn blue, purple, and pink once we see something wild like this move, okay? And where are we now? It's just in the yellow, man. We've been in the yellow here before a 10x. I mean, we have been yellow here before a dip. We've been yellow here a few times before dips. So, I mean, you pick, right? You pick which one you want to take a look at and make your decisions accordingly. These are just models, right? Just mathematical models. I think they're cool to look at. But, these are our heat maps. So that's what I wanted to show you guys. So a lot to look at, and just to finish off, I like to finish off these videos with a quick update on our regression rainbow because, we actually bounced right off of it, as we were calling for the longest time, finished our bull flag, reached our textbook target, and what comes next? What have we been talking about? Well, we've been talking about this potential fractal playing out. And again, if you watch the videos, you know exactly what I'm about to say. We had accumulation back here between red and yellow, local peak to the green, accumulation around the yellow before popping off to the pink band. So over here, just drop everything one band, okay? Accumulation between red and orange, so one zone lower, local peak to the yellow, one band lower than this green peak over here. And then could we have accumulation around the orange over here, potentially? We've been talking about this. So what would that look like? Again, it would look like accumulation between the 3 and 4 penny region, analogous to this accumulation we had over here around this yellow region before actually blasting off. And keep in mind, this was near all-time highs. And where are we now? We're at all-time highs around that range where, it looks like blue skies from here because we don't have price action above here just to set a precedent to what's actually going to go on, right? We have no idea or I guess with Uniswap V3, now we do have an idea of what liquidity looks like across price ranges. I believe I took a look at it earlier, and the majority of HEX liquidity was between, it was in the 3 penny region. There's a slight chunk in the 2 penny region, probably people setting limit orders. And then we also had a good amount of liquidity beyond 3 pennies up to like 10 pennies, I believe. So we can take a look at that at some point in a future video. Uniswap V3 liquidity concentration for the HEX pair. Again, this V3 just launched yesterday, so it might be a good idea to wait to see liquidity kind of gather up in the V3 pools. Okay, so that's the video. Let me know what your thoughts are in the comments below. Leave a thumbs up if you enjoy this kind of quantitative technical analysis. I've been working on the website and it should be ready much sooner than later, so be on the lookout for that. Leave a thumbs up on the video if you enjoy it. Subscribe if you haven't already. And I will catch you guys in the next video. Peace.